Wednesday, June 28th, market analysis, Stan Ehrlich. Good morning, middle of the trading day at 9:44 California time. I start out with the stock market indexes and the S&P 500, and that's exactly what I am going to do again this morning. The daily data chart shows us the turn of the market on October 13th with a ER buy signal, automated, 100% automatic. Listen to my recordings a day or two before or during and after that time frame. I think you'll like it. Right now, we got overbought a couple of weeks ago. The market was in the process of making new highs for quite a substantial, a little over a year time frame. There's a variety of support areas below the market. We have already, like I expected and said, come down, not as far as I want yet. We had a rally yesterday, and it bounced off of the day before and yesterday's lows and closes, the beginning of some support. So a little bounce and a little short term. It's taken a week and a half now so far. A little bit of a bearish correction. I think, and I'm expecting and forecasting that it'll come down to 423 to close a gap that occurred at the beginning of the month, June 1st and 2nd. So it's almost a month old now, that gap. And because we have a higher high today, above the highs of the last few days, and currently it's failing fairly quickly. We're getting down 80 cents lower on the day, dropping off in the last few minutes, actually quite sharply, but now extremely oversold on a very short-term 1-minute basis. So I expect an immediate small, very small bounce. It could be 50 cents or a point, but it's very, very, very fine-tuned. After that, if it happens, and I think it will, we're going to see another attempt to make a new low. If we do that, we're getting closer to the low of yesterday, and I'd just love to see an outside down day bearish engulfing. Now, it won't be an official sell signal because we're not overbought within the last several days and last few days, and well, I'm not going to have a red bar, but I will have a bearish engulfing, which is by itself a bit bearish, if not, under certain conditions, profoundly bearish. So I think we're bouncing already a little bit. So what about the DIA? Rally for the last couple of days. It does also have a gap to close at 332-ish on the Dow Jones ETF, the DIA. And I am expecting to see new lows with the Spider and DIA in the matter of the next couple of days, maybe by the end of the week, certainly during next week, early next week probably. And it'll be on its way down to close the gaps. Now, what I want when it gets there, if it gets there, is for it to be oversold, for it to close the gap fairly accurately, and maybe would be fantastic if we have a bullish engulfing green ER buy signal also. And that would be, I hope, next week, or maybe late next week, and maybe a little bit later than that. What about the QQQs? Well, they've been a little bit stronger than the DIA and the S&P and have made new highs for the last 5 days, just barely. And now they're lower on the day by a hair. And it could end up with a bearish engulfing also, like the DIA. Excuse me, did the DIA get above? No, the DIA was an inside trading range so far, no higher, no lower than yesterday, a doji. And simply it's going to start to break down, I hope, and make lower lows than yesterday, and then for this little swing down. But the Spider and the NASDAQ have been able to make minor new highs for a few days, and has at the moment has given it up to be slightly lower. But we have half the day of trading left, quite a bit of time to do a lot. What about the Russell 2000, which I've been talking about now for quite a while, weeks, because it did have a bearish engulfing ER sell signal on the high day in an area of resistance. And of course, it had to be overbought to get the signal to begin with. So we picked the high day on the Russell 2000, and it's bounced a little bit now. And it also, just like all three other indexes I've talked about already, has a gap to close from around the beginning of the month. So that's the reason why I am a little negative, minor amount, for a small amount of time, a few days to a week or so, to get down and close the gap. It's in all four indexes. You don't see that very often. Enough said about the indexes. Now we're going to go to the futures markets. And the first one I'm looking at is, of course, the E-mini, the S&P 500 list, just like the spider. But I remind you that we do have different signals because it has different trading hours and therefore has higher high and lower lows sometimes than the SPY. Of course, we got October 13th for a major buy signal, and we got, in some cases, by the way, the exact top of the bull market after COVID, which was around January 3rd or 4th for some of the indexes. We got a bearish engulfing on the high day. You can't beat that. The beginning of the bear market and the end of the bear market. A signal on each end to the day. Okay, so I'm looking for a little bit lower levels, come down to some support, which is around where the beginning of the month, the gap is for, I think, the other indexes. So that makes sense. So a little bit more correction should be starting like now, maybe. And I'm keeping an eye on 87 lower, 90 lower at the moment for the spider, 115 or a point and a small fraction for the DIA, and a half a point for the Qs as we speak. So maybe I'll take a look at that when we finish the futures. Next chart for futures. And we've got the bond market and the 10-year notes holding in support, holding bull trend lines, going sideways lately. I need a new high for approximately 5 weeks or so, and then we'll be in another resistance area, but that's the last resistance area. Remember, if we get up to 135 in a closing basis on the continuation chart in bonds, we will start to have a major, huge, long-term bullish breakout and start probably a very strong long-term bull trend. I'm going to guess lasting well over a year. The 10-year notes, this chart here, same kind of commentary. It's just the 118.19 level for a major long-term bullish breakout. And I do think it's going to happen relatively soon. I might add a little more time than what I've been mentioning. So I'm going to say in the next couple of months, maybe 3. Next chart, starting the energies, crude oil, didn't break down the way I was kind of thinking yesterday, below a minor short-term support of 66.88. But once it does that, and I do think it's going to happen very soon, it's going to challenge the major support area, which is a 64.20-ish. Breaking that, and I do expect that also, is going to be super bearish long-term. Since the top of the market, which was a broad double top formation, and we got a great sell signal extremely close to the second highest high on the double top, basically the beginning of this bear trend. Since then, we've seen the lower highs and lower lows, which is a basic definition of a trend. And that has been since last April. So a year, April, May, June, a year. And I don't see any change of the long-term trend. Next chart is another energy, heating oil, came up to resistance a few days ago, stopped, pulled back to a little bit of support at the moment, bouncing off of that couple of days in the last 4 days. I don't think it's going to hold. I think we're going to go below 2.3 and slide below 2.0. And that's going to be a major downside breakout long-term. And Tierra del Fuego, head south. Slang for the southern tip of South America. So I'm bearish on heating oil and crude oil. Let's look at natural gas. We got a sell signal recently. It didn't work. A day, half a day. And we came up and got overbought again, right almost exactly at previous rally highs, which were in May, the middle of May, a month ago. Topped out, and last couple of days starting to slip back down. What's the major trend do I need to tell you? Bearish as heck. Major long-term bearish head and shoulder top formed. We got the top of the market to the day in the heating oil, natural gas head and shoulder top formation. The head is a bearish red engulfing ER sell signal. You can't get day by day more accurate. So the formation worked very quickly, took about a month, and we are still in this long-term, slowly flattening out, now at much more reasonable historical price levels, but I don't see any trend change here. Still, higher highs are not being seen, higher lows are not being seen, and we've got a bear trend. So I am expecting to see a breakout to the downside soon to perpetuate this bear market. Let's start with gold, silver, and platinum, then copper. Gold. We picked the bottom of the market back in a small double bottom on February 28th. A week or so later, we double bottomed out and up you went. We got overbought. We turned around. We had a couple of buy signals. One of them worked a little bit. The other one didn't. The buy signal, very disappointingly, a few days ago has not worked. And this continues to point out that this is probably a bear market. And I'm going to start to talk that way. So we're looking for a test of 1,850 and a break of that level. Minor problem at the moment. We are oversold again, which implies that you're going to have a little bit of a bounce. And I'm giving you an educated guesstimate of 1954 to maybe up to 1987. Great year. So I'm bearish again, looking for a test to support at 1850-ish and probably lower after that. But momentarily today, a little oversold like a couple days ago, and I don't see any major bottom forming of any consequence, looking for new lows. Next is silver. We caught the bottom of the market back in March 10th to the day. And do I need to tell you, I've been telling you for a couple of months now, we caught the two highs on the double top with my code, ER signals code. Fantastic. I won't see this for a long, long time. Both highs on a double top and another sell signal just before it crashed. Downside breakout, minimum downside objective fulfilled, and then a bullish engulfing at the bottom of the break and a rally for 2 or 3 weeks with a great trade. Now, we got oversold a couple days ago. We've had a little bit of a bounce up into small resistance, and it could even go a little further. I don't think so. I think we're getting ready to have a new low again. And I'm looking for a test in silver of the last major bottom in March, and that would be down to approximately 20 and a third. Next, platinum, we got the bottom on the February 27th date. All the way up, one sell signal during a little double top. Unfortunately, it wasn't one of the two highs. Sometimes I see these signals inside of topping out or bottoming out formations. Bottoming out meaning buy signals, and not necessarily the lowest or the highest day of the swing. Oftentimes, yes, like the top back in January 11th, like these three highs, two of which, well, at least one of them was the exact high. This one was super close, and that one was almost. So yes, frequently we get the high or very close to it. Not always, but when we don't catch the turning point, we automatically have a protective stop in, and we don't take big losses. Momentarily oversold last couple days. I'm looking for a bit of a bounce. Support did not hold, but we're back to where we were for the low of the day, basically for the last 3 days. And if this thing rallies a little bit more, this would be called a false downside breakout, a washout. And being oversold, I wouldn't be surprised to see this this day today to be the beginning of a short rally, but I'm bearish. And if it doesn't rally and it stays lower, a bit lower than where it is now, let's say below 925 or 24, 23, then we got a downside breakout and more downside potential. Careful, being oversold means we may not go too far too long and then have another bounce. Where? Up to where we are right now. But that's only if you get more weakness today. Next chart. Copper. Not too much of a comment, except we got overbought and we're having a correction and the trend is down. So I'm bearish and looking for a test of 3.5. Bearish and looking for new lows for many months. It may take a week or two. Next. Soybeans, and this is the beginning of the grain group. New low for a week or so. Got very overbought. Warned you about this. Got up almost exactly to previous highs in during January, early part of this year. And overbought at the same time means down. And that's exactly what we started with yesterday. And I feel vindicated today because we have a new low for about 6 days. Mostly the top. We just started the move down. I think it's going to come down to at least 1185-ish. And I would not be surprised that in a few weeks, a month or two, we could be down to 1088-ish, 1090, below 1090. Looking for a downside swing of substantial amount. Next chart, bean oil. And I'm expecting to see bean oil starting to drop because we have a bearish engulfing and overbought condition. You really couldn't call this a double top, but yeah, you might get away with that. But I think the highs are not quite as parallel as I'd like, about the same prices. Rarely is it going to be exactly the same price. It's always slightly different, but very close for double tops, and triple tops about the same. So we might have a double top starting here if you want to call it overbought. Yes, at the high of the day today, and I think there's a very strong likelihood this is the turn. I'm looking for the first support at 49.60 to be tested in a few days, and then lower. Next chart is soybean meal. It already did exactly what I think the oil is about to do, and it's about to test the lows of the whole trend. So going backward one chart, here's the oil turning maybe today. Here's the meal getting overbought in resistance, and it turned a few days ago. So I got to say, I think oil's going to do exactly what meal has just done the last couple of days. Next chart is corn. Same commentary. Corn got up to previous highs, resistance in an overbought condition, and started to slide. And I talked about this, of course, when we were overbought. And we're coming down pretty darn good. So the next stopping point could be around 515 and then 480. Below 480 gets really long-term interesting. Very, very bearishly interesting. Keep tuned for that one. Next chart, wheat. We got the top of the market at the beginning of the war on March 8th to the exact day. This is one of my more spectacular, unbelievable, who in the right mind would go short a market that's going limit up, limit up, limit up, limit up, limit up, limit up, day after day after day. My system did. We came down for a year now and got overbought on a rally and started to head south. I think we're going to test these lows. I do want to mention something. I think this bear trend is going to slow down in terms of its speed of declining. So I'm not looking at a really harsh crashing bear move like we obviously saw at times a year ago. Instead, I'm looking for a more mild bear market continuation. Next chart, live cattle. Sell signal on top of the move to the high day, exactly, June 7th. Complementary sell signal worked very well after that. Remember, we don't stick around to have 100% of our profit taken away from us. So we're stopped out probably yesterday or the day before, or day before, somewhere in the last 5 days, probably 3, 4, 5 days ago, more likely than not. made a little money, not too much. We're flat at the moment, but that doesn't change the fact that the sell signals are on the highs of rallies in a what could be the end of a bull move. I'm not quite sure this bull market's over quite yet. I need to get new lows real soon on a closing basis below 168 in order to be more confident about new bear market that would go all the way down probably to the 150s and even lower. So lots and lots of elbow room in order to be a little bit more convinced. That's our downside breakout below 160, 168, let's call it. No more comments at the moment on live cattle because it's getting a little stronger the last couple of days than I originally expected. Next chart. We got the high so far in live hogs. Today we're about unchanged. It looks to me like we're going to see lower lows real soon, next couple of days. And the next support level would be around 84 3/4. And this trend is obviously a long-term bear trend. We got a sell signal on the first major high. The high back in February of 22. And only about a month later, March 31 of 22, another perfect sell signal on the high. A few rallies here and there with some buy signals, and then we got another major sell signal extremely close to the top in August. So, is this sell signal a few days ago going to be as profound as the one, for instance, that we got back in August or back in March of 22, etc.? It could be. I can't tell yet. Bear trend means you're more likely to go down than up, and there's no really change of the bear trend. When it rallied, it came back up sort of in a resistance area. It's not very well defined, but pretty close, and reversed. So I need to see lows under 88.18 soon. That's yesterday's lows. And on a closing basis, to be a little bit more confident about that longer term bearish commentary. Next chart. OJ. I'm going to pass on OJ. Neutral. Looks like maybe a top is building. Next one is Cocoa. Screaming bull market, but overbought. Be careful. Don't go long up here. This is where you're looking for sell signals. This is when you want to, if you're long and lucky and making a lot of money, raise your sell stop, raise your protective sell stop, lock in more money more quickly and tighter. So I'm going to pass on that incoming call at the moment. Next chart is cotton. Looks like oversold conditions may cause it to bottom out momentarily and start to move back up again. I like what I see for support, but I don't think it's going to hold for very long. Cotton's been such a kind of boring sideways trading range since last fall. So I have to wait for another breakout up or down, and I think it's going to be down. And lastly, sugar to sweet. Downside objective is now getting closer and closer, and that would be 2170. And we have a new low and a new low close likely today, but it's the second day in oversold conditions. So we just might get to the objective first before it bounces. But any time now, you could see a bounce. And then finally, I expect to get to the objective, but that won't stop it probably. There's no other reason except the measurement techniques. The real support is at 2035. So I'm expecting a move down to 2030-ish. Next chart is the E-mini. We started that way. Thanks a lot. I'll see you tomorrow. Have a great trading day.